All right. Good evening, everyone. Thank you so much for tuning in to today's edition of Virtual Office Hours. We are currently live not only on StreamYard, but across the Kenyan Wall Street, LinkedIn, YouTube, and X accounts. We have a very exciting discussion here today with a very qualified panel to give us insight into the topic of investing in Africa's future through private equity. So I want to give everyone a minute to join the room and get settled. So please let me start the countdown and then we will get kicking off here in a moment. Thank you. Good evening again, everyone, and thank you so much for joining this week's edition of Virtual Office Hours. We have a very exciting discussion here today, and we have a very qualified panel of experts joining us to help break down this topic of investing in Africa's future through private equity. In case you missed something or don't have an opportunity to watch the full webinar, after we conclude, this will be available on the Kenyan Wall Street YouTube page. You can also reference our X account and our LinkedIn account to find the full uh, video and conversation here today. But as I mentioned, we are discussing investing in Africa's future through private equity. I guess first question, becomes what is private equity, and then diving into what are the trends and different industry insights that our experts here today can open up for us on the private equity side. So to kick things off, I would love for each of our guests to introduce themselves and their company. So Aéko, can we start off with you?
Yes, thank you very much. My name is Aéko Ongodia. I'm founder and CEO of XENO. XENO is a technology company that builds the technology that helps people to plan, save, and invest for their financial goals. We are operational in Uganda, Kenya, and there's a few more countries we are entering in. Thank you. I'm excited to be here.
Thank you so much, Aéko. It's a pleasure to have you. Adolfo, can you please introduce yourself and what you do?
Yeah, good afternoon to everyone. I'm just greeting you from Brussels. We have a very bad weather here today, very rainy, very gray, but I hope it's better in Nairobi, in fact. Anyhow, good to see all of you. I am working in the European Commission in Brussels on actually mobilization of capital for Africa. I'm leading the Team Europe Investing in Young Business in Africa, and I'm also the Boost Africa program lead from the European Commission. So that is what I'm doing now. I used to be based in Kenya until a year ago, and it's actually great to be able to talk about something that is in my heart. The mobilization of capital for Kenya. So yeah, good to see you, and looking forward.
Awesome. Thank you so much. It's a pleasure to have you. And last but not least, Mercy, the CEO of the Association of Startups and SMEs. Mercy, can you please tell us a little bit about yourself and what you do?
Yeah, so hi everyone. Good evening or morning from wherever you're watching. I'm Kimalat here. I'm currently in Embu, which is a different town in, or different county actually in Kenya. So here it's definitely rainy, Adolfo, so don't feel bad. I'm on the countryside. So what we do at ASSEK is that we bring together incubators, accelerators, venture builders, co-working spaces, community spaces that are actually trying to support startups and SMEs unlock their business potential to access markets and finance to help them scale and grow. We're more than 210 entrepreneur support organizations based in Kenya, but also we have seen growth across the region, especially the Southern Africa and Western Africa. So also our network's influence is also expanding across Africa, really trying to provide the right capital, markets, and enterprise support to the entrepreneur just where they are. Thank you.
Thank you all so much. So Mercy, you said you're in Embu. Me, myself, I'm in Nairobi. Adolfo, you're in Brussels. Aéko, where are you joining us from today?
I'm in Nairobi today and it's raining outside.
Yeah, I decided to come home a little early today because it was raining. But perfect. Well, I think this is a great time to just hop right into things because we have a lot to discuss. I know there's a lot that I want to learn and that our audience has been wanting to learn. But I would say, you know, for everyone tuning in, doesn't matter if you're listening on X, LinkedIn, StreamYard, wherever. If you have a question, please put it in the comments section. And the last 10, 15 minutes, we will be going through some of those questions that you're asking and addressing them directly. So we'd really appreciate it. If you have a question, now is the time. I know these guys, you know, they consult at very high hourly rates. So, you know, I got them for you for free for a few minutes. So if you need them, just let me know. But, you know, to get us started, I think I have one general question that I want everyone here to answer. And that question is, why do you think Africa's PE market has lagged despite rapid entrepreneurial growth? And Aéko, I'd love to start with you. I think you're on mute.
Sorry, thank you very much. Sorry. The PE market, I don't know if we've already defined PE. I don't know if for the audience already knows what PE is or somebody is going to define it for us first.
I think that's a great place to get started. Would you like to define what private equity is for us just briefly?
In my understanding, whether it is what it is will be judged by the audience. But my understanding is essentially private equity is the good way to sort of say it is position it against public equity. Private equity is investing in privately held companies that are not available to the public to purchase. But the essence of investing in these companies is in order to identify high potential companies that are maybe presently underperforming, and then inject capital in them to accelerate that growth and subsequently grow them to such a level that they can then be offered to the public. And therein you have your exit, maybe in the public markets or maybe some other exit. And so my understanding, that's the extent of my understanding of private equity. It's slightly further down the road from where things like venture capital start. So why has it lagged? It might be interesting sort of have numbers attached to it. I think lagged relative to where, maybe relative to the US, relative to the UK or Europe, and relative to Asia. I don't have those numbers on hand right now, but the scale of it in the US and in Europe, you would guess that it's much bigger than it is on the continent. Part of the reason, and if we can just allow to have this conversation before we get the numbers, but part of the reason is not as commonplace here is there's some misconception around the size of the market and the size of the companies that are available, and subsequently the exit opportunities. So once you've invested this capital into these companies, what are the exit opportunities that are available to you? And so potential investors might hesitate a little when they don't have a good sizing of the market. So they have the capital to deploy, they don't have a good sizing of the market. One, they don't have a good context of the market. Two, and then there's a hesitation around what does that exit look like. That, in my opinion, is one of the reasons why people hesitate a little bit.
Okay, Mercy, would you agree with that assertion, that there are significant misconceptions often holding back the African private equity industry?
Yeah, well, thanks for that. And just building up on what Aéko was talking about, if you look at the private equity firms, they invest to get a return or to actually exit from the business, right? So they're not there for possibly 15 years until you grow. Actually, the quicker they can get their money out of their business or someone to buy them out, the better for them. But as you're looking at Africa as a whole, we have different kind of challenges, right? So one, this global shift in terms of funding, whereby now, for example, you'd find development partners who are actually subsidizing the cost of actual private equity firms. And that actually helped them to take more risk in more fragile economies, for example, like Somalia, DRC, Burundi, Malawi, and different other countries, because they could actually deploy more capital in those kind of fragile economies, achieve better impact, but the investor had the security from different financiers to support that. But now when the funding has actually come to, actually it's quite reducing, and I think Adolfo can speak more on that one, then the private equity investors really have to rethink how they deploy capital and which markets they're looking into as well. The other big thing or big challenge that also we're seeing is the growth of the businesses, and there are different barriers and challenges that an SME or a startup is facing. One, of course, is always the infrastructure. So when the investor puts in the money into the business, the hope is that the government will come in to actually lay the infrastructure so the entrepreneur can actually scale across the different borders. And that is why networks like ASSEK come in to really do a lot of advocacy to build a case of why government and different regulatory partners need to come together and quickly solve the structural or infrastructure challenges, so that even investors, as they're putting in the capital in the business, the entrepreneur can actually scale their products and services, thereby getting more cash flow. More cash flow means you can pay back the investor. The investor is actually happy to even deploy even more capital as well. The other thing also is around the financial systems. So if you're looking at the tech scene within Africa, of course, fintech has played a very key role in helping to deploy affordable financing, especially to the grassroots communities. But the challenge you find is also the cost of accessing that kind of capital. So again, it goes back into how can investors really relook at working with more local institutions, for example, even looking at funding incubators and accelerators where they are, so that they can actually help them deploy the capital, at the same time doing proper due diligence and also coaching and mentorship to match the capital to meet the business need. And with that, we'll have better accountability, more transparency of the capital and how it's going into the business. And that actually is a better return for the investors. So there's a lot of elements around collaboration that still needs to happen within the ecosystem between the founders, the entrepreneur support organizations, which is the incubator accelerator, and most importantly, also with the private equity firms also. So those are just some of the thoughts around that.
Yeah, collaboration is always king. And, you know, the best example of the difference between public markets and private equity that, you know, I guess we can give in the Kenya context is the difference between investing in Safaricom and investing in, say, Java House. You know, Java House is notorious. Every few years, you can just expect that Java is going to be sold to a different private equity company. But, you know, when you look at Safaricom, you can just go to the securities exchange and buy those shares. So if there's anyone watching who's still curious about what is private equity is that Java House example. It's not necessarily the Safaricom example. Now, moving over to Adolfo. Adolfo, I'm curious, your take on this question. Why has Africa's private equity industry lagged despite entrepreneurial growth?
Yeah, thank you, Andrew. I just wanted to elaborate a little bit on what my friend Aéko was talking about. We have to define, we have to make clear for the public what is private equity, that is an important definition. I was just quickly browsing because, of course, now people now they have access to many ways of browsing, and the definition of private equity is very clear. You just browse, you say private equity refers to investments made into private companies or public companies that they are taken private using capital that is not listed in a stock exchange, and it is a major part of alternative investment industry alongside with venture capital, hedge funds, and other funds. So is investments in private companies or public with a private stake that is not in the stock exchange. So that is simple kind of definition, and it's quite clear. In terms of numbers, I was just browsing while he was talking. Just to give you figures, very concrete figures. We have places like the US where they are ahead into the private equity space, and they have very clear kind of calculations. There is a private equity to GDP, the amount of money private equity to GDP. That is a standard indicator of how much money is available in an economy regarding private equity. So full amount of 2022 in the US is $1.7 trillion, what is 6.5% of the GDP. Now, 1.7 trillion in US. You go to Kenya, and then it's 1.2 billion. So from billions to trillions. You see, 1.2 billion in 2018. So just to give you a sense of the figures, of the amounts. Of course, we're talking about a different kind of economy. It's okay. But the potential for growth of the private equity industry in Africa is enormous, because we know that the needs for capital mobilization in Africa, they are huge because of what we already know. The population growth, etc. We know what is happening in the continent, and we need to mobilize capital. Everything is about capital mobilization for investments, public and private. So anyhow, another figure that is mentioned several times: Africa receives 1 to 2% of global venture capital. Okay, venture capital, private equity is a little bit different, but the amounts of money that go into the continent on this space is very small. So the potential for growth is big, and the relevance of this kind of capital and this kind of asset class is very important for private sector companies in Kenya in particular, because you can have also money coming from the banking sector, etc. But private equity will be able to provide capital to companies like the one that is led by the CEO by Aéko. So this is just to give you a little bit of definition and figures. The potential of growth is big. So in fact, what we are actually trying to do from the European Commission, the ministry where I work, that relates to partnerships with countries in different continents, and in this particular case with Kenya. Okay, we try to find a way to channel more private equity into the continent. And the objective of Boost Africa program is actually that. From the Commission, we partner with the European Investment Bank and the African Development Bank to invest in private equity funds that then subsequently they invest in companies. So that is a little bit the basics. But the definition, I think, is quite clear. Data is available in the net. It's quite easy to browse and see the difference between economies like the US in terms of private equity percentage of GDP and also the total amounts of money that we're talking about. You can see that. The potential is very big. So that is what we are trying to support on,
Absolutely. And I think we all agree that there's a massive potential for the industry, to continue growing. I'm curious, real quick, have you seen any particular industries or sectors that have been particularly popular for private equity across the continent? That's a question for anyone.
Sectors. Well, okay. That is a good question, but I would say private equity funds, when they are set up with a focus on the continent, they try to be as wide as possible on sectors because that allows you to have more options. It's simple. I mean, you have a fund that you try to invest in different companies. So the wider that you are in sectors, the better. It gives you more flexibility, more options for investments, and also geographically as well. The more countries that you can invest on, the better for a private equity fund. Okay, we have seen an increase of private equity funds that they are focusing on climate-related change or climate adaptation, etc. There are a number of them, but of course, you also have a number of private equity funds that they are focusing on the engines of the economy, energy, for example, agribusiness when it comes to some other countries in Africa. I would not say there is only one sector. I would say that there is this need that we just discussed, this wide need of capital, private equity capital deployed into the continent, and there is a proposition of many different sectors and also different countries. Although when it comes to countries in Africa, you have 4 countries that they are the ones that are attracting the majority of private equity. That is Kenya, South Africa, Nigeria, and Egypt. Out of the big 4, then okay, well, that is another story,
Okay, interesting. Now, Aéko, I'm curious with XENO Investments, do you have any particular sectors that you look at or follow closely, or do you follow Adolfo's mindset and thesis of, keep the net as wide as possible? You're on mute.
I will stop muting.
It's okay.
Otherwise, I'll continuously embarrass myself. Maybe for the context of the discussion, let me just sort of center XENO. So XENO is both a technology company. We build technology that powers the rails that people use to invest. People, when I say people, this is individuals. But in order for us to obtain customers, investment is regulated. So we need to be regulated as a fund manager. So XENO is a fund manager in Kenya, is a fund manager in Uganda, and there's a few other jurisdictions where we've gotten licenses like Nigeria as well. And so what XENO is doing is essentially helping individuals save small amounts of money in order to hit a particular financial goals. Then those small amounts of money are aggregated are executed using regulated investment funds. In this case, unit trust funds or mutual funds, if you like. So XENO has we probably have the broadest number of unit trust funds. So we have a money market fund, we have a bond fund, we have a domestic equity fund, we have a regional equity fund. These are UGX denominated, KES denominated, and we recently got approval for international equity fund. And so technically, this is just so we get some context here. So what XENO does is, on the one hand, we're helping individuals invest to meet their financial goals using regulated investment products. But on the other hand, we're also actually aggregating the small funds in the economy into actually large investable funds that can be deployed at scale. Hopefully, subsequently, we can organize other funds that can be deployed as private equity funds. So technically, if you like, we essentially aim to be like the BlackRock of Africa. So BlackRock has some public funds that are targeted towards individuals, but we might also subsequently, if we reach a certain level, organize private equity sorts of funds that are targeted towards LPs and can be deployed into these enterprises. But back to your question, which was what sectors do we see? This is from observation. What we focus on right now is we invest in publicly regulated investment assets, treasury bills, treasury bonds, and organized into unit trust funds, so money market fund, bond fund. But what I've observed activity on the continent, there is quite a traditional focus on sectors such as utilities, specifically energy, because they require quite significant deployment of capital, because these private equity funds come
asset-heavy businesses.
Yeah, relatively sizable, and they're relatively sizable, 250 million funds, 1 billion funds, and you sort of need to deploy that capital at scale. So the sorts of businesses that can absorb that capital, energy is one of them, mining, maybe financial services as well, right? And so this is where we've seen, and we have seen as well, what I've observed is entities in the hospitality industry, maybe coffee chains. Java House is a favorite. They turns over quite a few. Coffee chains, in the agricultural supply chain, we've seen quite a bit of sizable transactions, but also in the healthcare sector, hospital chains, hospital systems. Yeah. Andrew.
Yeah, I know when I was preparing for this webinar, I was talking with a few the members on our editorial team, and they said, they've been seeing most of the activity exactly where you just said, a bit on the retail side, say, with companies like Java House, and then especially on the healthcare side as well. But now, hearing yourself and Adolfo, you guys are very keen on, helping build this industry up. So I want to hop over to Mercy. Mercy, from where you sit, do you think that not global institutions, but local, Kenyan institutional investors, Ugandan institutional investors, are they ready for things such as private equity? Are they interested in it, or do they want to remain with the traditional products?
No, we're seeing a growth of interest, because again, the biggest thing to tackle within entrepreneurship is always the mindset. So there's a typical example of how African founders, they tend to hold on to the business, even if it's worth, let's say $100, they would want to own 100%. Yet, if they actually brought in a private equity investor, they could own 5% of a $5 billion dollar revenue business. And so those are some of the mindsets that we're trying to shift, especially with founders, especially looking at agriculture. If you're looking at energy, if you're also looking at water, there's big investments coming into water and the wash sector. Also, if you're looking at sectors like creative economy, so looking at licensing and copyright issues. So there's a lot that we're trying to do as ASSEK to advocate for how entrepreneurs can scale by actually adopting alternative financing models. But also the fear always from the founder is losing control of their business. But then again, entrepreneurship is about risk. So if you're able to bring in diversified funding that actually can help you scale faster and reach more markets. And the good thing also with the private equity firms that they also bring a suite of consultants and experts that actually support the enterprise to walk the journey and actually professionalize their systems, their processes, and governance. And that becomes quite interesting, because now, if they were only operating in Kenya, they now scale into, let's say, 15 countries, They have diversified partners, they have diversified products, they have even institutionalized a board of directors who now provide accountability, meaning you can even approach other DFIs to actually get more funding, like for example, World Bank and other agencies, to get even more capital and even more infrastructure support to build your businesses. Alongside this, also trying to advocate with governments, looking at how they can create an enabling environment and incentives to have more private equity firms to actually be established within the local country and actually operating. So if you look at the case of, for example, Tunisia, they actually offer incentives and quote unquote insurance back to the investors. If you invest in a local company and you do end up losing your investment, the government gives back around 30% back of the investment. So the PE doesn't really lose out on the entire investment, and that makes it more investor attractive for them to establish in those markets. And that's what we're trying to do, not only in Kenya, but even across East Africa, to see how do we change the policy landscape to have such investor-friendly laws, and also encouraging investors to establish their own firms to be established there. A few other things that also we are seeing is that there's also a bit of maturity signals that are also coming from the PE firms. So if you're looking at local funds like Chewy Ventures, Front End Ventures, they're now actually trying to invest in more diversified pipeline. At the same time, also trying to do sector approach strengthening. And then also we are seeing a growth of second generation founders, meaning founders are actually selling off their business, which means they're exiting and starting another enterprise, which is actually fantastic for the ecosystem, because now we can have more diversified businesses coming into the market and solving the problems for the community or even for the economy. But of course, going back to collaboration, if we really want momentum, then we need regional collaboration. So looking at the East Africa community, looking at the Southern community, looking at Western Africa, looking at also North Africa, how do we leverage all these regional blocks to really help investors, scale also across the different regions and reach the right type of entrepreneur as well. But the tipping point will come when we actually have more local capital being deployed, and that's how we can leverage pension funds. We can also leverage insurance funds that can really anchor all this PE that's coming into the local market for sustainability.
That's interesting. That reminds me, I was in New York City a few weeks ago for the UN General Assembly, and we had hosted an event with many Wall Street investors, introducing them with many of the top companies here in Kenya. And one of the questions that I was just walking by, and one of the questions someone had asked one of the businesses was, well, if your local investors don't believe in you, why should I?
Yeah, exactly.
And I think that brings up an interesting thing that has often been missed, particularly, especially in the venture capital space. But, as you had rightly mentioned, it's beginning to change. I'm beginning to see more and more local activity. But, this brings me well into my next question. So I want to jump back over to Adolfo. How can regional and national regulators help improve predictability and investor confidence, similar to, I guess, the example that Mercy had given with Tunisia? And also, does that include addressing some of the bottlenecks that exist within the industry?
Yeah, Andrew. Yeah, before I answer that question, I wanted to point out something. We have to be a bit more concrete on what is a private equity fund as well. I mean, which kind of fund sizes we are talking about and which type of ticket size, because private equity funds themselves, there are many different sizes. They invest in companies with different ticket size as well. So it's not the same thing to talk about a private equity fund that has a size of $500 million that invest in companies $10 million tickets than to talk about another fund that is a local domicile fund. I don't know, for example, in Uganda, of 20 million that invest ticket size of 500,000. So we have to break it down a little bit. Otherwise, we are going to have a discussion that is very generic and a little bit not very practical. So we have to come to the specifics. We have to come to which kind of private equity fund are we talking about? A big one or a small one? Or a smaller one. So I just wanted to point out that, because the kind of discussion that we're having on private equity funds requires that difference, and especially now that you're talking about what a regional or a national regulator can do to support the mobilization of local capital. Because yes, you are right, Andrew. I mean, if the investors, the local investors, meaning the pension funds of Uganda or Kenya or wherever, they are not investing in companies themselves, why do an investor from abroad has to come to do that? So is the right question. The question that they were asking you in New York, and obviously when we are supporting, as the European Commission, we are supporting the European Investment Bank to invest in different funds through the Boost Africa program. And I'm going to be concrete and just giving examples of the Boost Africa program, because that's why I'm here. Through the Boost Africa program, the European Investment Bank invested in different kind of funds, invested in Telcom Tide Africa Fund, invested in Partech, invested also in Africa Invest. These funds are bigger. They have different sizes, but they invest bigger ticket size. Through the Boost Africa program, the European Investment Bank also invested in another 3 funds that are a bit smaller: Atlantica Venture Capital Fund, Django, and Seed Stars. In fact, our friend Aéko here is an investee. It's a company that has been invested by Seed Stars. The investment of AIB in Seed Stars and the full size of Seed Stars is significantly smaller than the one, for example, Partech. So we have to break it down. The objective of Boost Africa program is, on the one side, yes, to channel capital from Commission, European Investment Bank into, for example, Seed Stars, but it's also about mobilizing private capital. And when it comes to the mobilization of private capital, you have 2 different types. The private capital that comes from Europe, for example, you have family offices, private foundations, or other kind of investment from private companies, sometimes from the ESG pocket, because we're talking about impact investment funds. So you have the private capital from abroad, and you also have the capital, the local private capital, the one from pension funds. Mercy was mentioning also insurance companies, whatever. So we try to use capital from us to be invested in funds, but the objective is not only to invest, it's also to mobilize other investors, it's to leverage. So by leveraging, then you have that joint kind of thing happening. Anyhow, mobilization of local capital is very important for us, because without the mobilization of local capital, then everything becomes about foreign investors, and that is not actually the objective of Boost Africa. Boost Africa is about also channeling, sparkling, dealing with this kind of local capital investors. Yeah, just to give you a specific example of something that I know firsthand, because I used to work also in the European Commission office in Uganda. As Commission, we partnered with IFAD, the International Fund for Agricultural Development, to be actually the anchor investors. This was a small local domicile fund, 10 million from us, together with IFAD, and because it was important to have this local capital component in the fund, the NSSF Uganda, that means the main pension fund of Uganda, co-invested with us. And thanks to the co-investment of NSSF, we managed to close the fund. We managed to have a first closing, and then, okay, later on, We had other kind of impact investors that joined. We have an impact investor from Finland, another one from the US, and then we had a second close of 20 million, and everybody was happy. Now investments can happen. But we were happy for two main reasons. One is because the fund was closed, first close, second close, managed to mobilize capital not only from us as public institutions, but from private impact investors. But the most important thing was that the NSSF of Uganda co-invested with us. They co-invested with us in an asset class that they were not used to co-invest or to invest in. So it was great because then that opened doors for NSSF Uganda to be open now to invest more in those kind of asset classes.
Yes.
Not majoritarian investment into government bonds or listed companies. No, they came to this kind of different asset class. Now, you will see what is going to happen in a couple of weeks. NSSF Uganda is organizing an event for African pension funds to be able to mobilize more capital into different asset classes. Why? Because the money that is available in the continent is the money that can be used for the development of the continent, for the development and the support of the SMEs companies in different countries. So they have taken the lead. It's a very interesting event happening in a couple of weeks, and this is the kind of things that we love to see happening. Because then the money from the savings of the people of Uganda can be used for the development of the SME companies in their own country, and this is great. So anyhow, just to now to respond to your question, national regulators, what they can do. Okay, we actually, again, using the example of the fund domiciled in Uganda. Okay, we use that example and all the difficulties that we had to be able to talk to the government in Uganda and say, see, what happened to us? It was so complicated to domicile a fund in Uganda because of two main reasons. One, it's very difficult to set up a company that is an investment company given now the local regulation in Uganda. And the second thing is taxation. You are taxing companies that they are doing investments, investment funds. You are taxing them twice because you are taxing capital gains very high, and you're also taxing the profits of the companies. You have to do something, otherwise you will not have investors investing in locally domiciled funds in Uganda. So we use the example of that fund to discuss with the government. The government changed mainly the process of how to register a fund in Uganda, and also reduce capital gains tax for attraction of investors. So those kind of things are actually in the hands of national regulators.
Okay, interesting. Now, Aéko, I want to jump back over to you real quick, because one of the biggest bottlenecks that a lot of private equity investors see is revolving around currency volatility. This often scares investors. What innovation or blended finance mechanisms are proving to be quite effective in mitigating that FX risk and encouraging institutional LPs to commit capital across Africa?
Thank you. I actually have very strong opinions on that. I'll just come back to that a little bit, but I'll just make a point. Adolfo, I used to, about a decade ago, so I used to manage about 75% of NSSF Uganda's portfolio. At that time, it was about $1.5 billion. Part of the work I did there essentially informed what I'm doing now, which is the NSSF Uganda was managing money for about only 300,000 Ugandans, yet there were 18 million Ugandans that were needed to access the services of a professional investment manager. And so I set out to go and build technology to basically expand this significantly to others. And this is the work that I'm doing now. And also NSSF Uganda has a significantly better reputation than NSSF anywhere else. I won't mention the name. not because they were my former employers, but I was there and I interacted with the two, and I've been back and forth the two countries for the past 2 decades. But currency volatility as a hindrance for deploying capital in the region, specifically Africa, is a cop-out, I think. And this is why I have very strong opinions. I did this when I was at the NSSF. I did this after I left the NSSF, basically just using Ugandan data. And you can use Kenyan data as well. Go over 2 decades. What is the annual depreciation of the currency, of the respective currency? Take Uganda, take Kenya, take Kenyan data. There will be some exceptional years. There will be some exceptional years, 2012 and much more recently in Kenya. But that depreciation is somewhere around 2% at most, right? And so depreciation, and that 2% does not in any way, if it happens, actually over the past 1 year or so, even 2 years, we've actually seen an appreciation, at least in Uganda, a significant appreciation of the currency, that people who are spending in dollars are like, why? What's happening to my dollars, right? And so I think currency is just part of the play, right? And it's a feature and not necessarily a bag of deploying capital across borders. There are on the continent certain exceptional countries where currencies have fallen through significantly, but 2 of those big ones, and I can mention them because it's publicly available information. Adolfo will tell you where to find that information. Is Nigeria and Ethiopia, right? They've gone through significant currency reforms, and currency reforms are now accepted as a cure for some of this volatility that would be present if there were no reforms to make those currencies clear at market, right? And so the 2 of Africa's largest economies, at least in my opinion, have undertaken significant currency reforms in order for that not to be a reason not to deploy capital. And people are deploying capital in those economies despite that. And so for me, the strong opinion is really you take the investment with the currency that you can. There are ways to sort of the interesting ways, currency swaps, forwards, whatnot. There's interesting derivative contracts that you can get into, or you can blend it away when you're deploying capital. You can blend equity and debt. But at the end of the day, you are essentially taking exposure, the underlying exposure or the fundamental asset that you're investing in, or the sector you're investing in, with also the diversifying effect of the currency you're deploying money to. That's my opinion.
Okay, interesting. Now I want to start our Q&A here in a minute, but before we do that, I want to go over to Mercy. I have a question for you in regards to, private equity. What steps does the industry take to be mindful of inclusion of youth, inclusion of female entrepreneurs and such? What have you seen from kind of the association level of involvement and interest on that side?
Yeah, thanks so much for that question. And it's really good to see that all this advocacy and trying to leverage different reports by different partners in the ecosystem and actually calling for more investor roundtables is actually working, not only within the African spectrum, but also at a global level, whereby they're actually recognizing that women are left behind, yet actually they're better and more solid entrepreneurs in terms of structuring their business and actually ensuring that they are paying back to the investor. And so looking at that, we're seeing more dedicated funds for women, and then also other dedicated funds also as well for the youth, which is fantastic. And with that, it comes with different terms and also conditions around that, and also longer periods, depending on the geography also that they're investing in. So they're leveraging more of working with with local institutions, financial institutions. They're leveraging working with associations. Like even for us, we've also worked with like East Africa Venture Capital Association, looking at how do we redesign some of the investor pipeline. The pipeline, of course, is very important, but also looking at the investor ticket sizes, like what Adolfo was talking about, and the different investment theses. Because if it's a mismatch, so like for example, I'll tell you about clean tech. There's a time when it was actually buzzing. By the time we had not built the ecosystem and don't have enough clean tech startups, right? And so we made the plea that can you actually set aside some funds that can help to activate or catalyze that sector by having more conversations with entrepreneurs, by doing more capacity building to help them refine their business model. So that in a way is how the PE firms have helped to also get other capital to help diversify that as grants to support building up the sector, so that now they would come in and actually invest. And we've also seen a few foundations who also have another arm, an investment arm, where they spend time building the fragile economies. So trying to do a lot of capacity building, try to invite investors, exposure tours, and then they would come in later at maybe 7 years later to now come invest in those different groups. So there's definitely need for more roundtable discussions, more tailored packages as well, looking at that to also support. And then, of course, adding the element of mentorship and accelerator support, because to be honest, when you deploy capital into a business, the business is now on another level, right? So it needs a different kind of approach. It needs a different mindset with the founder. It needs a different go-to-market strategy. It has to redefine its processes and systems. And that's where mentorship and coaching come in very strongly. And also adding the layer of professionalism to ensure that the business is growing. But the other thing that also we have to look at is the early stage investors. And in Kenya, this is way back in 2010, there was a lot of early stage capital that came into the market. But then you find that because investors really wanted to get back an ROI, they actually moved from early stage to now focusing on growth stage and scale up.
Mm-hmm.
And there again became another big gap that was not captured. So again, other investors are coming together to form consortiums to invest in the more high risk and early stage ventures. So that helps them also to manage their risk. And those are some of the collaborations that we're seeing. But then again, also working with an association where we can continuously do advocacy for the enabling environment. We can help redefine pipelines around that. That becomes instrumental. And the final thing I'll say before we go to the Q&A is that we are actually hosting our 7th edition of the ASSEK Annual Conference, and we'll actually be having an investor summit where we're looking at how entrepreneur support organizations can deliver quality and tailored pipeline to the private equity investors, to the different foundations and other financial partners, so that we are also streamlining our processes, our programming, and also even updating the skills of our staff to be able to apply the right tools and techniques so that we give quality pipeline to the PE to invest in a much shorter time, but also quality businesses that have a bigger impact potential. Yeah.
Mercy, I'll have to give you a call tomorrow. We'd love, as the Kenyan Wall Street, to be involved in that where possible, because what you just said about telling the story about how you can organize, how you can set things up, professionalizing your business, as Adolfo had mentioned on the technical assistance earlier. Those are things that are very important that I don't think enough people know about.
Happy to.
But awesome. So as I mentioned, the Q&A section of our conversation today is going. I have one final question for each of you, but I will retain that question for final remarks. I see we're getting a lot of interesting comments and questions in. A few quick shout outs. I see Naomi has joined us today. Thank you so much, Naomi, for joining us. Sylvester Omondi as well, who's tuning in on LinkedIn. Thank you, as well as Samson. Thank you guys so much. We really appreciate it. Now, we have a question here. This is in regard to the term they're using is government lobbying. So I guess that would be, on the front of pushing for regulatory reforms. So this question, everything in the Q&A, unless it is specifically targeted to one person, is open for anyone to respond to. The question is, do private equity firms engage in government lobbying, strategic communications, and such? And if so, how do they go about that in regards to pushing, I guess, better policy for both themselves and their businesses?
Andrew, I think let me pick a little bit on this one. And Aéko, it's great to know that you were working with NSSF before, But actually, I was just going through your LinkedIn, and I just realized that you left NSSF in 2014, and I came to Uganda in 2015. So we didn't work together,
Okay.
Meaning, and I am pretty sure that you know very well, because you were in NSSF, the difficulties of making sure that some of these big players in the ecosystem of Uganda in terms of money, moving them into investing in a different kind of asset class. You know very well how difficult it was. And NSSF, 3 billion capitalization. The last time I remember, 3 billion per year. We come from the European Union delegation. We have budgets of 200 to 300 million per year. So NSSF is 10 times bigger than us. But sometimes it looks like you have to bring somebody from abroad to invest or to create a fund. No, you don't. But it's about what Andrew is asking about. I mean, he's asking about how the government of Uganda, in this case, or the government of Kenya, can actually regulate in a way that is not only about attracting capital from abroad, but making sure that the local capital is mobilized for the right reasons, for the right economic reasons of the people of the countries that we are talking about. That's why when I just saw and engaged also with NSSF Uganda, and they are also mobilizing other pension funds in the continent and also in the region. When I saw this kind of meeting where they are on the lead, I was very happy to see these kind of things, because that is what we want to see, and then all the challenges that we always talking about, the currency risk that Aéko was talking about, the shallow capital markets, how difficult it is to exit. Some of those problems will vanish because the capital is local capital. So if you have NSSF investing, okay, it could be a hard currency fund. Okay, fine, but you can even create a local currency fund. Why not? Is the money coming from NSSF? The money of NSSF is collected in local currency. It's not collected in hard currency. So the possibilities are endless. So you just need something to spark these kind of conversations. We have been in touch with NSSF Uganda to continue having more investments into financial structures like the one of Yield Uganda Fund, because that was the beginning. Now they see, okay, it's possible. And well, the results are good, because what the European Union / IFAD actually offered to the pension fund was protection of their investment. We are A share class holders, meaning that we protect other investors. We protected NSSF. NSSF is not going to lose the money in that fund, because we protected our 10 million, we protected the other investors. Means that whatever happened, even if the fund has very bad results, NSSF will have the money back, because obviously NSSF doesn't want to invest money from pension and savings from people into something that can go bad. So they end up investing in government bonds that they are secure. you end up investing in companies that they are listed, because it's very strange that they go bankrupted. They want security, so we provided that security, and they invested. We can do more of that, and even within the capital available in the different countries, you can set up structures like the ones that Mercy was talking about. The government can create that kind of guarantee of investments in the local capital currency. They can do that. They're doing it in Morocco. Why they cannot do it in Kenya and Uganda? They can do it, but yeah, let me just leave it there, because I get actually quite passionate about this. I like to see things happening, and I like to see the mobilization of capital in these markets, and it's happening, And from what I have seen in the example of the region, of East African region, more things are going to happen in the next years.
Yeah, and I think, one of the things with interest rates starting to come down, government securities are less return as they used to be for some investors. So now they're at a point where they're starting to look for other opportunities. And I think this is a very valid opportunity for certain institutional investors who find it within their risk profile. But we have another question here. This one is for Mercy. This question is, what is ASSEK doing to push local capital in Kenya into riskier investments? And I'll do one better for you as well. I'll expand it. What can we all do to push more local capital into industries such as private equity and such, which is traditionally owned largely by Western investors?
Yeah, actually, I was just trying to type on the chat in case we didn't get to that one. But what I'll say, and also tying on the question that came up earlier, was, to be honest, investors don't have time to go to government offices and say, hey, give us a share. They actually don't have time for that, because they're more focused on, one, building their own fund. Remember that they too also have to be accountable to the people that are actually funding their fund as well.
Yeah.
And then they have to deploy, they have to do due diligence. That's a lot of work, right? And that is why you find investors join networks like ASSEK, so that as the collective body, that's the work that we do. So we literally have a whole pillar on policy and advocacy, and also we've been working closely with the Ministry of Treasury. Again, that's another whole conversation, looking at how can you have anchor funds that are directed to the startups specifically, another one for the SMEs, and even another one for the micro and small, because every type of business needs its own type of capital. So that's one thing. The other thing also is advocating within the local market. So yes, we want to have pension funds, release funds, but we also know that we have very wealthy individuals. Instead of them investing, for example, in real estate or buying a farm and doing agriculture, why can't we provide for them a portfolio of high growth enterprises that have been backed up and actually have the growth potential to scale, and then present that to these kind of wealthy individuals? Thereby, we are actually creating what we call angel investors, where we have people who are putting in their own capital into these early stage or growth stage enterprises until they reach a certain level. And then now the venture capital can actually come and buy out the stake from the angel investor. So the angel investor gets back their money, and they can go back and support more early stage enterprises. So again, there's actually something that we can all do. If all of us come together and say we're going to invest, even if it's 100,000 in a specific business, that already is 1 million. I think maybe I'm assuming we're 100 people in the call. That's already 1 million. So we're doing that already as a local ecosystem, driving that forward. The other thing that I'll also say is that we do have other type of investors, like foundations. We have development finance institutions. We also have philanthropists and also angel investors who are already providing capital to those people. And then again, look at it as a value chain. So you can't expect one type of investor to support the entire business throughout. That's why we categorize also the investors per their business growth and then link them up for support as well. Now, what we'd like to see happen is that we need to definitely unlock domestic institutional capital. And also, if you're looking at the Africa pension funds, just a bit of statistics that I also came across was that they actually hold more than 400 to 500 billion dollars. Again, like what Adolfo is saying, it's even more money than what the foreign capital is coming into Africa. Yet you only find that less than 1% is invested in private equity. If we're able to review the pension investment regulations and also creating credit enhanced PE vehicles, we can actually mobilize more than $20 billion in long-term capital within the next 5 years. Again, we also have to think long-term so that we can actually start to build a capital base, but at the same time also unlocking local capital. So if you really want to build Africa, because it's a Pan-African conversation, then we need to start with what we have and then work with incubators and accelerators and investors to really shape up that conversation. And then I'll have partners like European Commission who have been supporting for a very long time. And I remember meeting Adolfo the first time when the EU had actually funded, was it Equity Bank? Equity Bank and a few other banks as well to provide capital to women entrepreneurs because the banks already have the infrastructure. So we also need to have conversations with banks who already have deposits and it's in billions. What are they doing with it? How can they redeploy in a safe manner that they feel comfortable in? So that's another conversation that we need to have to really unlock local capital, because my money is sitting there, your money is sitting there, and it's just, I don't know, in a money market trading there, yet it could be deployed into a startup that could actually accelerate its growth. Yeah, thank you.
Okay.
Yeah, Andrew,
Well,
if
thank
you
you.
don't mind, I just want to follow on something that Mercy said.
Please, please.
Well, because the conversation today is about private equity, and we made that very clear. That's why I've been focusing on that. I've been focusing on what is Boost Africa, what is the support for investments in different funds, in partnership with the European Investment Bank. The European Investment Bank is the EU bank. It's the one that the Commission provide the money, and then they are the ones technically investing in funds for us. We don't do that job. They do it. They do it together with us. The investment in funds, as I mentioned before, is not about capitalizing the funds only. It's also about leveraging capital from private investors that could be European or local, and this includes pension funds. We have gone to the example of Uganda that is not actually with the European Investment Bank. That was a European Commission initiative. And then you mentioned before what funds themselves can do in relation to regulations changes. But I think that funds, okay, they play a role by example, when it comes to difficulties of raising capital. But institutions like the European Commission in this case, that is where I'm working, but other kind of institutions, that is the ones that have to play a role on the policy dialogue with the national countries, because the funds, they already have their own kind of very big role, that is on the one side mobilize investors to invest in the fund, and then later on to find companies to invest in. So they are actually full hands on that, either to deal on mobilizing capital and investors, and then deploy the capital. They have a lot of things to do, and they are very busy with that. If they also have to do policy negotiations with the governments, then okay, well, I think that is the role for other institutions, and that is what I think that what Mercy is doing in ASSEK is very important, because you, as an association of different institutions that are in the ecosystem, you have to talk to the government as well. Even companies, they have to talk to the government. But I've been focusing more on private equity because that is what we are talking about. Again, Mercy, what you're talking about banking, very important. I mean, banks, they have a lot of money for SMEs. What are they doing with the money? You are right. I mean, they are, again, policy decisions that can be done by governments that influence a lot the banking sector. Just to give you an example, India is another country. I'm not putting an example now of the US or Europe or whatever. No, India is a country that has developed enormously because the government is forcing banks to allocate, I don't remember, but I think it's around 30% of the assets of the banks to be deployed into SMEs. And they force them. And if they don't do it, they put fines. But they put real fines, not theoretical fines, because the government is friend of so person. No, sorry. You have a fine if you don't give 30% to the SMEs. So that is another thing. It's the banking sector. But you have examples in India. You can use them for your own economies. You don't need to go and say, oh, these guys in Europe, they're doing this. No, sorry. India is also doing it. And then you see the influence that it's having in their economy. The economy in India is not growing out of the blue. It's doing because they're doing a lot of right things.
Absolutely, absolutely. So thank you for that, and thanks for bringing up India. That's always a great, it's a great example. And Mercy, I see you're responding to a few of the other questions in the comments, so thank you for that. Now I know we're a bit over time, so I would like to come to my final question today. Like I said, we've been live here for now over an hour across LinkedIn, YouTube, X. We've had several hundred people join us throughout the course of today's discussion. And if you haven't had a chance to see the full discussion, you can always find it on the Kenyan Wall Street YouTube page after we conclude. Now, coming to my final question, and I want to go through to everyone on this. Aéko, we can start with you. This question is, what gives you confidence in the future of African private equity?
Thank you. So at the end of the day, really, you're talking about private equity, public equity. At the end of the day, the investment is in an enterprise that is providing a good or service to a set of people, right, that are consuming that good or service. So if you deploy private equity money in a business, that business is providing a good or service. So if you go down to the fundamentals, to the basic constituents of that business and or that location, or the location where that business is, how many of these people exist? These millions, hundreds of millions of Africans, if the question is about private equity in Africa. And it's a growing population generating significant amounts of GDP a year, and it is growing. So the confidence that I have is driven by one fundamental thing. The future is going to be African. There are going to be more Africans than any other geography there is. And they are going to need, they are going to consume services. They're going to need to eat food. They're going to need to call people. They're going to need to consume internet. They're going to need financial services. They're going to need. So if that is the future, what are the companies right now best placed to service that population in the future? And how are we building that pipeline? What do we need to do today in order to create the T-Mobile of 2045? What are we doing today in order to create the JP Morgan of, what are we doing today in order to create the Huawei of 2050 from Africa? And so that sort of long-term thinking with the assurance that there's going to exist more of us 5 years, 10 years, 20 years from consuming these services. Is there any entity, anyone that has resources to invest in the process that is going to service that demand? That demand will be there. That's what gives me the future. And part of the work we're doing right now with XENO is not only to organize people's savings into to help them achieve their objectives, but to ensure that we're creating these investment vehicles. Earlier you asked about what can we all do. It's part of what we're doing is just organizing our individual capital. When we started in Uganda in 2017, when we were pioneering the use of technology to create investment accounts in 2017, there were, ladies and gentlemen, there were 2,300 investment accounts outside of the NSSF. So Adolfo, at that time, there was about 300,000 NSSF accounts. Outside of the NSSF, 2,300 investment accounts in a country of 40 million people. Yeah? Today, XENO alone has managed to help create over 500,000 investment accounts using technology alone. So these are some of the things. One, we have the tools to build. What we don't have enough of is the capital organized into investable vehicles. And so those investable vehicles could aggregate private capital internally, because we have that capital. Private capital internally, maybe there is a boost that can come from Boost Africa, for example, that can act as a trigger, and then also internally advocate for accommodative regulations to allow the growth of these vehicles to operate in order to fund the businesses of the future.
All right, thank you for that. Mercy, same question. What gives you confidence in the future of African private equity?
To be honest, Africa is where it's happening, right? If you look at the projected population, by 2050, it will be 2.5 billion people. So what are you doing investing elsewhere, not here? So the potential is there. We are the growing continent, vibrant youth, quality skilled, because most of the young people are actually educated, meaning you can actually get good talent. And then also, if you're looking at the agriculture sector, it's actually thriving. And like what Aéko mentioned about the technology, we are actually improving on that. So we're looking at agri-circularity business models. We're doing a lot of value addition. If you look at the number of exports from Africa to Europe, it's also increasing. I know the AGOA Act between Africa and the US is, it's shut down, but there's still other avenues opening up. I'll give you an example. Like if you look at the upcoming conference, we're actually hosting a delegation from Korea who are saying that they want to invest in Africa and they want to start in Kenya, then go to West Africa and other parts. So if other countries are seeing the value of investing in Africa for their own continent's future, then why should they miss out? So there's an opportunity, but again, of course, it's having the entrepreneurial mindset. For me, I'm very optimistic because anyway, as entrepreneurs, our vitamin A is actually problems, right? So taking the problem, translating that into an opportunity. And so what we are doing consistently, and we're seeing momentum, is that government is now starting to understand innovation, and they are actually also setting up specific funds to complement what the PE firms are also doing, and that helps with more deployment of capital. The second thing is that we are also seeing a rise of capacity building for investment analyst or data analyst, meaning we're also building the talent that also will advise international PE firms on where to invest, how to invest. And again, also for the local market, they're also being trained on how to prepare their business for venture capital to come in. And that is fantastic because now we'll be able to match the founder with the right type of capital at the right time. Because again, also, if you're an entrepreneur and you get capital at the wrong time, it could literally kill your business. And that is the work of the Innovation Hub or the Entrepreneur Support Organization to ensure we prepare you well to receive the right capital at the right time to help you scale and grow. The final thing is also looking at opening up of Africa. So there is a deliberate effort to actualize the Africa Continental Free Trade Agreement, and governments are speaking to each other, meaning there's free movement of goods, people, and services, and that already is an opportunity. So if investors can actually come together more, and we can actually support them to shape their capital for the region or even for different geographies or diversifying of the different sectors, then that will also bring bigger impact. So if you're a PE firm, please, Africa is a place to go. Do not go anywhere else. deploy right here. Even Adolfo, is a testament to that, deploying it here. So it's a place to be. I leave it at that.
Thank you so much for that. Adolfo, last but not least, same
Mercy,
exact question.
Mercy, we need you as an ambassador for Kenya to mobilize capital from the rest of the world. I am ready to put all my money in Kenya right now after listening to you. Anyhow, I'm just. Andrew, thank you very much. I mean, I think that some of the conclusions from my side is just a consequence of what we have been talking now in the last 1 hour. So you have a very interesting mix happening right now. One, and we spoke about it in the very beginning, is the potential for growth. You have the potential to have much more private equity mobilized in the continent, okay, in Kenya as well, because of the percentage of the total amount of private equity invested in Kenya in the global picture is small, but also because the percentage of private equity to GDP in Kenya is small, and the total amount of money is still small. So you have the potential for growth because you are starting from a relatively low level, so you can grow because you have that potential. The second piece of the puzzle, you have the right engagement happening. Events like the one that is going to happen in 2 weeks in Uganda, where you will also have some pension funds from Kenya and the region, is the right move. They want to mobilize capital from the pension funds that they are a very substantial amount of money within the different nations available for investments in different asset classes. Some of them will be for infrastructure, some of them will be for private equity funds, but that discussion is already happening. So you have the right engagements going on. The third piece of the puzzle, you have already good existing examples. The Boost Africa program with the European Investment Bank is already having de-risking mechanisms in place to be able to attract investments from different investors. The investment, for example, of the European Investment Bank in Seed Stars, the fund that invested in the company of Aéko, that was a de-risking structure. The European Investment Bank invested in junior tranche, meaning they protect other investors. You have already examples. You have examples that can be replicated by the national governments, whatever. We can do more of that. So you have good examples. And then the last part of the puzzle, impact proposition. Investors around the world are looking for impact proposition. So when you put together money coming from abroad together with local money from pension funds to invest in private equity, then you have the perfect combination. So what I can see and what gives me the confidence is all these pieces of the puzzle that are coming together right now. So anyhow, looking forward to see more things happening, and then from our side, also from the European Commission, from the European Investment Bank, we want to continue growing, and we want to see more of this.
Absolutely. And thank each of you for joining us this evening. Aiko, it's a pleasure learning more about what you've been doing with XENO Investments. Mercy, very interesting to learn about the association and the work that you are doing. And also Adolfo, it's been a pleasure talking about the impact that Boost Africa has been bringing in, and it's quite interesting. I think I actually learned a lot this evening from our discussion, and I think many of our viewers as well learned quite a bit from this discussion. So thank each and every one of you for joining, and to our viewers, thank you so much for tuning in this evening, whether it's during your commute home, or I guess if you're listening in Japan, this is the morning. Wherever you're listening from, thank you so much for tuning in. We've had several hundred people from across the globe tune in, across LinkedIn, YouTube, X, from all different sorts of places, all different perspectives. If you're interested in more conversations and discussions along this side, please follow the Kenyan Wall Street. This is what we do. We do insight-driven media where we're talking about, industry trends, what's taking place, beyond just the normal headlines and press releases. But everyone, thank you guys so much for joining. If you didn't catch the full webinar, you can catch it on our YouTube page once I hit in stream here in a second. And I hope to catch up with all of you again offline here soon. But thank you so much for tuning in. Thank you, guys.
Thank you.
Thank you, Andrew. Thank you so much.
You too.
All right.